Next question comes from Josh. I have a question about dividend yields. I often see them written out as a percentage. For instance, I see on Fool.com that AT&T currently has a dividend yield of 6.2%. Is that equivalent to an interest rate? With banks still paying less than 2%, a 6% interest rate sounds great, but I'm not sure if a dividend yield is essentially the same thing.
That's a good question. And in short, it is essentially the same thing in that you are either going to get paid for having your money in a savings account or with a CD, or you're going to get paid by a company who offers a dividend for hanging on to their stock. Now, typically, a company is going to pay a dividend 4 times a year, once every quarter. And that rate or that percentage that you see, the yield, it's based on the amount that they pay out compared to the stock price. So that can certainly fluctuate. But generally speaking, particularly in today's interest rate environment, dividends are a far more attractive option. And I think they will be that way for some time to come, because even though rates will continue to go up, they will go up fairly slowly. And companies, generally speaking, these companies that pay dividends are pretty reliable. Their business models produce some pretty reliable cash flows that allow them to keep paying those dividends and oftentimes raising those dividends. So if you really want to find the awesome dividend companies, you look for the dividend aristocrats. And those are the companies that have grown those dividends for long periods of time. I think the qualifier is at 25 years or is it 30 years? I have to double check that. But anyway, they have a very long track record established of growing those dividends on an annual basis. So we'll probably hit a point in time where interest rates become a little bit more attractive. And when that happens, you're very likely to see some of those dividend stocks prices take a little bit of a hit as money starts to flow towards more risk-free assets. But for now, and I think really as an investment strategy on the whole, it's always a good idea to plan on owning some good staid dividend payers for long periods of time.